All right, good evening, good morning, good afternoon, wherever you are on this beautiful planet. Welcome to the Inner Circle Live Asian session. I'm your host for tonight's session, Benny Allen, along with my awesome partner, Mr. Ryan Carthage. And we're definitely happy and grateful for all of you being here with us this evening as we take a look at those technicals and those fundamentals, right, to see what we can take advantage of in the Forex market. So without further ado, let's make sure that we turn off any and all distractions. Grab a pen and paper, take lots of notes, and let's make sure that we participate and engage. So always, first and foremost, let's make sure we drop a 1 in the chat so I know that all of you can hear me loud and clear. All right, the chat is working. Good evening, everybody. Got everybody, Mary, Jerry, Brandy, Need, Ebony, everybody, good evening. All right, so let's dive right in. See what we've got going on. Give me one more second. Okay. And let me jump out of this. We are done. And let's take a look at the Forex calendar. So for Tuesday, October 11th, right, we've got the average earnings for the GDP for the Great British Pound that came in at 6%, beat forecast. Claim account changes that missed target, but the unemployment was at 3.5%, and then over in the Eurozone, industrial production came in right at 2.3%. So that was pretty decent. But we did get news out of the UK later in the day that kind of tanked it. But what else? So here, Governor Bailey speaking, right? We had SMB members, right? Swiss National Bank, FOMC member, Mester spoke, but Governor Bailey was the important one. And we know that they had gotten into, stepped in and had to buy older aging bonds to help support what happened in the UK as a result of a governmental policy thing that went down a week ago. And we saw the pound drop over 1,000 pips and come back as a result of what the BOE decided to step in and do with the bonds. Then they had to step in and do it again, right, to protect those pensions and everything in the UK. So try to avoid the disaster. But Governor Bailey spoke today and said, hey, what did he say? He said, if I can find it, Bank of England's Bailey, we saw quite a serious crystallization of risk that remains a live issue. Bank of England's Bailey, we have unprecedented volatility in long-term end of the gilt market, talking about the bonds. Governor Bailey said market volatility surpassed the bank stress test. Okay, so we're in a little bit of situation over there, all right? Bailey pension funds have the resources they require. The challenge is bringing them over the gilt purchases. Gilt purchases are a financial stability intervention. But what he said today was he pretty much gave them a pretty tight timeline to when he said it's temporary, right? It's a temporary intervention, and they pretty much need to get it together and figure out what's going on. So that caused the markets to tank a little bit for the pound as a result. What'd you say?
Said they got to the end of the week.
Right, that's what it was. The time, yeah, I know.
I got till Friday to figure it out.
Yeah, what's going on, Ryan? How are you, man?
I'm doing well, bro. How are you, man?
I'm doing pretty good. I couldn't remember exactly what the timeline was, but I know it was short. When I was
yep.
And, I was like, man, he just put that out there like that. So it caused some volatility in the markets today, but from a technical perspective, the pound is still moving in the direction that we thought, right? So, which is to the downside on several pairs. So what a mess, but hey, they'll figure it out one way or the other. We did have the IMF meetings today, the International Monetary Fund. So the International Monetary Fund, I think it's quote me, I think it's like 198 countries, maybe somewhere around there. Right. So and the main thing, right, is to monitor, right, the international monetary system. So the overall surveillance, financial assistance for the member countries, and technical support So they came out today, giving what they thought. So they decreased the global, based on their research and their reporting, they've got they're forecasting a decrease in the global growth. And the odds are rising, right, for a overall global recession. Okay, so they went ahead and put that out there. And they projected the United States at just growth of 1.6% coming up next year. But in regards to the United States and handling inflation, they see it far better than a lot of the other major countries. So they're looking at inflation. They're forecasting inflation to be back down to 3.5% by the end of next year in the United States. Now we know the target is always between 2 and 3%, and we know that it's been super high, 9%, upper nines. So they're looking at the aggressive Fed tightening. So they're forecasting that here in the United States for the inflation rate to be back down to 3.5% by the end of next year. So a lot of things going on in the markets, which is why we always combine the technicals and the fundamentals, right? It's important to know why, right? Why what we see on the technical charts, why it's moving in the direction that it's moving, right? And it can kind of give you an idea of how long it might move in that direction, depending on fundamentally where these countries are in their economies, okay? So, and where they stand in regards to monetary policy. So with that being said, Tuesday the 11th, Wednesday, we got GDP numbers coming out for the pound. So that's going to be another announcement and report that may create some volatility for the pound. And then we've got all types of stuff here, but the most important is that GDP number. We do have the PPI month over month coming out for the United States. For people who don't know who that is, what that is, our newbies. So it's the leading indicator for consumer inflation, okay? When producers charge more for goods and services, the higher costs are usually passed on to the consumer, okay? Those costs get passed on to us. So those numbers and those reports are very, 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 very important. So we'll see. We projected 0.2% tomorrow for the US. And so we'll see. And we got the core PPI coming out. That's supposed to be at 0.3 is the forecast. So we shall see. We got ECB, head of the ECB, Christine Lagarde speaking tomorrow, always important. And then you got day 3 of the IMF meetings, day 1 of the G20 meetings. So who knows what's going to come up out of that. And then at 2 o'clock tomorrow, we get the FOMC minutes from their last. I mean, in those minutes, I just expect it to continue to say that they're going to be hawkish, right? Based on the notes from their last meeting. So we shall see how that goes. Any questions regarding anything fundamentally that's going on? Nope, we're good. All right. So all things roads still lead to the dollar, right? Still the largest bull in the game. And we see here that the bond yields 10-year, let me move that back up, right? Approaching 4% again, 3.94% is where we are right now. So as the bond yield goes, especially on that 10-year, so goes the dollar. And you see here this price action on the 10-year. If you come over and you take a look at the US dollar, you see similar price action, right? Nice V-type recovery after that correction, came in at support, daily support, and we've been pushing up. So it's just a matter of whether or not it wants to take that high out. So we will continue to watch. We may not get a deep correction on this. It may just continue to the extension and continue to push long. So we do have a very, very strong dollar, and I suspect we're going to continue to have one. So like we said, we'll see the corrections, but then we'll look forward to continue to move in the upward direction. Any questions on the US dollar? Okay. Nope. There's the 4-hour, right? Moving right back up to test that level. It's beautiful price action there. Held, right? That was the question before. Is it going to hold at this level? And it did. And we got the bounce. So while we're looking at the US dollar, we might as well take a look at the US dollar pairs, right? To start out. And if we come to the daily, we are long as a result. It's holding above that 137.12 on the UCAD. So we're still long the dollar. And that Gartley we spotted a while ago within the AB boundary is still valid and good. We're holding against above 137.12. And we've got a D extension way up here at 140. Okay, so we'll continue to watch to see how this plays out. Anybody still holding that trade? Anybody take that trade? Drop me a one if you took the trade.
No, I missed that one.
Okay. Nope. Nope. Decide to pass on it. Anybody want to chime in and tell me why you decided to pass on it? Marked it but missed it. Okay. Don't trade the pair. Okay. Got it. Just missed it. A lot of people just missed it. Okay. All right. So remember, if you miss, right, your swings, then you can always, right, if we're projected to move, right? So off the level, say off the trend line break. Okay. Projected 436 pips to the D extension, right? Remember, you can always drop down to your lower time frames and try to catch a level. Okay. Try to catch a level, try to catch a pullback to get long. Okay. But fundamentally, the dollar's still long. Okay. Dollar's still bullish. So we expect this to move up. Okay. Will it correct? Absolutely. Just like it did here. Will it for over 400 pips, will it consolidate like it did here and break out? Absolutely. Break out and retest the consolidation? Absolutely. All types of things are going to happen along the way in this move, right? But you guys are learning a pretty powerful skill set in regards to being able to find, you know, those high probability U-turn points, and then being able to project, right? To project where price may head next over the long term. Okay. So it's one thing, okay, to make a YouTube video on how to trade breakouts and take it to the next level. Okay. It's one thing to make a YouTube video on how to play, right, a trend line break and a pullback. It's a whole nother monster, right, to be able to say, I know how to do top-down analysis, and I know how to project this for over 400 pips. It's a big difference, right? It's a big difference. You all are learning or have learned a really powerful skill. Now it's just fine-tuning it, you know, and working on your mindset. All right, so we are long on the dollar and on this UCAD right now. Okay, and you might have been in it and you might already be out. That's fine, right? That's already up off that break. At its highest point was up over 200 pips. Okay, on that one move. All right. So think about that. Okay, one pair. So what was that today, Ryan? My man on he promoted what? They had 299 pips for the month. I think that's what it was.
My bad. Yeah, it was $2.99 for the month.
All right, $2.99 for the month. So this is your one setup that's over 200 pips already in one setup. All right. So you all are learning a really powerful skill. Really powerful skill. Proud of you guys for hanging in there and sticking it out. Okay. All right. So dollar Swiss. Let's take a look at it. Okay. A while ago, right? We drew the crown. Okay. We drew the crown reversal off the pullback. Okay. That trade now, right, is up over 400 pips. Okay. Not the crown, I'm sorry, the head and shoulders. So we broke it, we broke the neckline, and now we're pushing up, right? Coming in at $1 for the dollar Swissy. If that's going to continue, then eventually we look forward to get to the projected D extension on the dollar Swissy. Okay. So the only thing I could think about that might slow that down, dollar correction in regards to potentially, major risk off situation, some crazy development that really strengthens that Swissy, causes everybody to run towards the safe haven. But it would have to be super extreme, right? Because right now everybody's rushing towards that dollar as a safe haven as well. So I look forward overall to continue to move topside. Okay. All right. So that's where we are on the dollar Swiss. Here's the 4. There was the double bottom off the 382. Okay. We talked about, and it's continuing long. We got the 1 hour. All right. That's the double top out of for the 80-20. Right. So when you first come in and trade, they say, look for the M. Okay. Look for the M. Right. There it is. All of this stuff, all of the little strategies, all the little crossovers and everything is all happening within the Fibonacci sequence. All of those patterns, all the things that you see, harmonic patterns, everything that you breakouts is all happening as, right, price makes an ABCD wave. Okay. So we're in an ABCD push zone on this 1 hour. We're getting close to that D extension. Right, pretty much right at $1. All right, so that's the dollar Swissy, right? And the dollar yen. Okay. So, right. This is the weekly correction, retest, pushing bullish. Okay. Correction, retest, pushing bullish. Dollar's just accelerating, right? This is what happens when you have huge monetary policy divergence. Okay. Two extremes. Ultra loose monetary policy from the Bank of Japan, super hawkish monetary policy from the United States. Okay. Remember when the Bank of Japan stepped in, they said they don't like it. Speculation to create the volatility, moving into one direction too fast, right? Everybody's going against it. So they stepped in, right? They said, hey, it's too fast the way it's moving in one direction. Causes too much instability. We need it to move slower. Well, it's moving slower, but it's still moving up. Okay. So that's where we are in regards to the dollar yen. Staying bullish on that as we head up to that 118, 127 zone. We'll be right. We're above 145 now. Okay. We're above it. So we got this 147.66 is that high target. That'll put us right in that 118, 127 zone. If we can get there, then we'll see. We'll see what's going on fundamentally that might cause that to correct, or to where some profit taking would occur for the dollar yen. Any questions on this dollar yen pair? No? That level held big time. Okay. It's not even going to range. It's breaking through that level. That's probably going to hit that D extension, right? Right at that high at 147.66, right in that 118, 127 zone on the daily. So we may see a reaction there. Okay. All right, let's look at gold. All right, we got price that turned over just shy of 382 on the daily. We are in the sell zone. We're back below 1677, that monthly level. Okay, see if we'll retest it again. But a decent size correction. Look at that come right into the sweet spot, everybody. All right. If you develop an overall bias and say, hey, I'm bearish, right? We understand, we put it to 2 and 2 together. Yes, I'm bearish, but the market moves in waves. So we are looking for corrections to give us that high price. Either we buy those corrections, we can buy those corrections, or we wait for a high price to get short. And you can see it came right into your sell zone, formed a high, tested it, right? You zoom in, okay. You can see it pushed, tried to test it again and it failed at that 4-hour level. Okay, right in between your 50 and your 61.8. And we're bearish right now on gold. So we're back short. So it moved all the way to a high price. As long as it doesn't take out the A, it has no choice but to go our way. Okay, short on gold. Any questions on that right now? Okay, awesome. Do the work, set your charts up, see if your charts align with ours. If not, figure out why. Right? Let's talk about it. Maybe you're right. Maybe we're wrong. Maybe it's something that we don't see. Right? That's what this group is about. Give us feedback. All right. Silver. Okay. All right. Climb to around that 382, push down. Okay. Pushing down. We're back below 1930, 1943. Okay. So we're thinking what? Short. Okay. Short. I've been having a hard time figuring it out. Right? With everything that's going on globally, we're short. Okay. So you look at this leg. Okay. Down on your charts. Look at this leg. What can I do with that? How can I get involved? Right? So it's like, hey, we're in this 80-20 zone. We haven't quite hit the D extension yet. But maybe we get that push. Okay. First to retest that level that it broke, 1943. Then maybe up for a high price. But when you look at what's going on, okay, what the IMF is reporting over the long term moving into next year, okay, if there's a lack of demand, okay, for the commodity, then we look to stay short. Okay. That's that. Let's take a look at oil. Okay. Kind of dancing around with back in the sell zone though. Okay. Tap that 93 level. It's moving down right now. Okay. See what that looks like on the 4. Okay. So we had a correction off of 93. Right. We're back in the buy zone on the 4. Past resistance becoming future support. See if this level holds at 88. Somebody talk to me. Who we got trading this oil? Somebody tell me what the thoughts are. Got in on the sell? Awesome. So that means you're up. Anybody else? Ryan, what was the story this morning? Anybody? I need to know. Further declines in oil prices?
We didn't look at oil this morning. But
yeah. Okay.
Yeah.
Yeah, I had logged on like 10 minutes late, so I don't know if you got it right away or not. Fundamentally, what's going on? Let's take a look. Below 89 for barrel on Wednesday, declining for a third straight session, pressured by mounting risk of global recession that will significantly weaken energy demand. All right, so we were just talking about the IMF, so that played into it too. Downgraded its 2023 growth forecast for the global economy due to high inflation, tighter financial conditions, Russian invasion of Ukraine, and the lingering COVID-19 pandemic, saying more than a third of the global economy will contract this year or next, and that 2023 will feel like a recession to many people. We'll see. We'll see what happens at this level. Right? We break that level, we look for pullbacks and maybe a continuation back down. Okay. So we'll see. We shall see. Sort of mixed on that oil because that could shift by the day with everything that's going on. That's where we are. See if it holds at that 88 level. Like I said, break below, then we're probably going to continue to move south on it. Sell maybe. All right. All right, Tabitha. Ebony, haven't traded in a while. I haven't taken any positions in a while either. but I'm wondering, we'll see. We'll see how it goes. All right, let's go. Let's roll up the Bitcoin. Nothing. Sideways. Nothing to trade there on Bitcoin. Jeez, what a mess. It's the 4. Well, that's that. Any questions on Bitcoin, right? Anything to add on these cryptos? I'm not trading any of them right now.
Nope. Nothing. Nothing at all.
No. All right. Well, that was quick. All right. All right. Jump up and take a look. Get into these Aussies. Take a look at a few of them. Aussie cat, right? Okay, we've been spot on with that one. Just continuing bearish. Right? Continuing bearish. Look at that. Broke that 87.33 and we're just moving. Okay. So if you're holding that position, keep holding it. Maybe we'll get some opportunities here soon. Right? To take these subs off. To continue now that the extension got hit. Right? Maybe at some point we get a correction. No, we got a stochastic in the sell zone. Maybe it continues to push down and actually taps that daily D. Don't know. But if you're bearish, stay bearish. Any corrections to the upside will give somebody the opportunity to either add to their position or to enter initially. Okay. So this is the 4-hour Aussie CAD. So we know the deal, right? Okay. We know what this looks like. We either get that immediate correction off the V boundary, okay, or we get that shallow correction, we move down to that zone, okay, then we potentially move up there. That's what we look for, okay? And you make the decision whether you want to buy that counter move on that correction, right? Because we know they do happen. We get people ask us all the time, right? We're supposed to trade with the trend, right? Trade with the trend. But look, the market moves in waves. We have a clear understanding of that now. Okay. Clear understanding the market moves in waves. There's plenty of mega counter trend traders around the world. Okay. So I don't get too tied in when it comes to that. We like to just flow like water. Okay. If the trade setup is there, you can get long. If not, wait for your high price to get short. Any questions on the Aussie CAD? Okay. I do have Tyler, I do have a Ethereum on here. Haven't checked it out for a while, but okay. It's been moving down. All right. We know it's been moving down. And we're probably going to eventually maybe hit that D extension. That ain't a bad for Ethereum for what the future possibilities are. 800, 8 cents, that's 720 at the D extension. I would not for trading, but for just longer term investing purposes. I would take it there. That's just me. That's what I would do, right? That's Ryan, what you think about that? I like it. I like it coming down, hitting that D extension. To get, I would just hold it at that point, though. I'm not looking. I wouldn't look to trade it. I would just hold it. You're welcome. You're welcome. All righty. Let me take a look at this Aussie Swissy. Right. And we look at this moving. So I've got this larger overall fib on it, and then we're just moving down, right? So I'm tracking it with these sub fibs on the daily. We just came into a D extension, 62.25, right? So the bottom line is short, okay? Short. We just came into this 4-hour D, right? That's what you saw on the daily on those sub fibs. So we look for at some point a correction, right? Here is the 1-hour chart moving down. 62.25 puts us in line with it, a 127 extension. So we may have an opportunity here to get to, right, a high price to continue short. Okay. All right. So keep a close eye on that one. Now with all of these and these 80-20 plays, especially if you're seeing with the Aussie because of what's going on fundamentally in the markets right now. Me personally, I'm definitely using additional confirmation to get in. So if I'm looking for a bounce off of those levels, those 80-20s, okay, I'm at least looking for an aggressive move to the upside and taking it off the trend line break, right? Or I'm looking for it to hit that level, hold, and push up and give me a correction, okay? And then looking to get long off the level, right? So like that. So anytime, and that's what like anytime you see a trade going and exhausting at an extension level, okay, especially when you start to see it on multiple time frames and you get that alignment. One of the best plays you can make is to go down to a lower time frame, right? If you're on a daily or 4-hour, you might want to go down to the 1, you might want to go down to the 15 or whatnot. And when it's coming into these key extension levels, start to look for reversal plays to occur, okay? So you might play this reversal, and depending on what type of trader you are, and how long you like to hold, trades, you may come down to the 15 and you may play an ABCD wave like this to the D extension, and you might be out of that trade and you may be done. That might be your thing, okay? For others, you may look to initially get in on this type of setup, and then you might ride it for 150, 200 pip target to a 382 or whatnot, okay? And then use these setups to add to your position. However you want to do it, one of the best things you could do is when trades are nearing an extension point, okay, like it's here, it's already hit the D, it's coming into support, is you want to go on high alert, right? Draw your trend line, okay, whether you're trading view, whatever you use, smart trader, put your alarm set, right? Set your alarm on there so you can get alerts to your phone or whatnot that, hey, we just got a trend line break, okay? Or whenever you have setups, because there are some people that just strictly trade reversals. They don't trend trade. They don't trade the C to D moves, right? So they wait on key extension levels to get hit. So you may have, for example, you may have a horizontal set at your 127 to alert you, okay? Because we've seen it enough that we know oftentimes we get priced to react at that level. So you may decide to say, you know what? I'm gonna put a horizontal right at this level, and I'm not gonna put an alarm on it. So when it hits that level, it alerts me. So I know, okay? And I'll put an alarm on my trend line for when it breaks. So just something, however you want to do it, just something to alert you that price has reached these key levels, right? Then the next one you might have is the extension level. Or if you like using support and resistance, put an alarm on your support and resistance level to let you know that I've hit that level. However you want to do it. But that's how you can have a busy lifestyle and still be able to trade effectively and consistently. All right, everybody follow me on that? Drop me a 1 in the chat. Okay. Any questions in regards to that? Right? If you've got a, like on the you know, if you don't want to necessarily use limits and stuff like that, say you've got a let's look at this pound dollar. Okay. And you get, okay, your correction and your zones start to get hit. You like 61.8s, you like 786s. Just put your alarm on, right? If you don't necessarily want to, you know, limit in, you don't like that, but you want to know, right, where a certain pair is and where price action is in my sweet spot. Just set an alarm at the level, so you know, right? And if you're using higher time frame charts, you got time, right? Hey, it hit the level. If it hits this level, and say I'm on a 4-hour chart, for example, this is a daily, but say I'm on a 4-hour chart, and I say I want price to form a swing high at that level, then you got time, right? You've got time, right? For example, here on this 4, okay, you can set alerts up at the 118, 127. You can set alerts up at this extension, that daily 1.18. The extension got hit. You can set alerts at your 61.8 at this resistance level at 65.47 at daily level, so that you're always in the loop of potential setups. That way, you don't have to worry about, you know, how can I get to my charts, or how can I just set it up? Just set it up and move on about your day. Because if it's not in the area that you like to trade, you're not trading it anyway. So what's the sense in continuing to click through the screens? Just wait for it. Do your homework over the weekend. Set up your levels, set up your fibs, and then identify them. Make that part of your homework on the weekend. I'm gonna set all my alerts before we move into the week, before the market opens. All right. So hopefully that helps some of you, right? Because I know we cover a lot of pairs, right? But they're not all, we might go over them over the weekend, right? And do our prep, but you're not going to trade them all at the same time. They all hit different levels at different times. Okay. So keep that in mind, right? More organized you get, the more successful you become, right? Over time. All right. So I want to go through, because of everything that's going on with these pound pairs. I want to take a look at again some of these pound pairs. So I'll start out. We already looked at that. Did we look at the pound dollar? I know I went to the U.S. pairs. I'm rolling tonight. Somebody remind me. Did I go over the pound dollar? No. Okay. Cool. Thanks, Jeremy. All right. So let's take a look at this pound dollar. Right? And we're just continuing bearish, right? We move quite a ways. Okay. Bearish on the pound dollar. Okay. We come to the daily. Right. You can see what happened. Look how we came into that level. Bang. Right. Moving on down. Look at the 4. Right. So that's moved, right? So if you had, right, this is the game, right? So if you had, okay, an order that you took at the 61.8, put you in drawdown, right? Okay. High point, 300 and some pips, put you in drawdown. Came to your 786, reversed. Okay. Initially, my stop was above the A. Okay. I'm just going to let it do its thing and trade small because my overall bias is bearish. Okay. So now this trade that was in drawdown, okay, is now up over 200 pips. And this trade at the 786 is now up over 400 pips. All right. So that's how that works. Because as long as it doesn't take out the A, it has no choice but to go my way, right? But I'm trading small, right? 1/4%. Even that drawdown is not tying my whole account up. I'm not going to get margin call on a drawdown like that. I'm not. I know that if I get stopped out, I know exactly what percentage I'm going to lose. Okay. So Jeremy, the 200 and the 50, right? That death cross, right? A lot of traders pay attention to that, especially like on your daily, your weekly time frames and things like that, right? When that's just extra confirmation of a downtrend, right? So when you get the 50 crossing over that 200, hey, I'm in a downtrend. I've got price below my 200 and my 50. I'm in a downtrend, right? So just additional confirmation. Great question.
Thank you.
You're welcome. You're welcome. And that's how all of those are, like whether it's a MACD, moving average combinations, it's just adding that additional confirmation, right? And the thing that you want to do is get consistent with your method, right? So if you use, 50 and 200 crossovers, some people use a 2200, right? Depending on how fast you want that moving average to be to reflect that crossover. Just be consistent, right? And if you have a check the box type of thing, just make sure that if a crossover with a moving average, with 2 moving averages or 3, or I know some people use a ton of them, just make sure whatever the boxes that need to be checked, just make sure that you're doing it consistently before you enter a trade, because ultimately that's supposed to be your edge, right? When you're doing that. So we've got it below the 200, right? So you might say, look, I need a trade in the sell zone on my fib. If I'm bearish, am I below my 200? Am I below my 50? Right? However you want to set that up in your trade plan, but just make sure you're consistent with it. Right? You can see it's moving, right? That was a beautiful reaction off the 200 there. Okay. All right. So that's that. Chat. Joy said you missed it on the pullback. You talking about the pound dollar, Joy, on this pullback?
Yeah, I had my limit order set at 839. It didn't hit it.
Didn't hit it. Yeah, it's all right, because if this continues to move, right, that's the long-term move. We got quite a ways. So you'll have other opportunities. This is the look, right? On the 4, on the 1, we had the crown reversal. Textbook, everybody. Okay, textbook. You study that in the training, that's a textbook. You got a trend line break. You got price taking out your A, your low point here. Look at that. Identify the left tip, foresee the right tip, and we're down, and we're moving down, and we continue to move down. Okay, so we expect this D extension to be hit. Didn't give us a deep retracement here, but it tried to retest the backside of that trend line and that 4-hour level at 112, and we're moving down. Okay, classic reversal pattern. So that's the pound dollar. Okay, any questions? So we're bearish. Okay. All righty. Pound Aussie. All right. It's hovering now, right? It's climbed quite a ways. Okay. But we're still within this AB boundary. Okay. We know the commodity currencies typically suffer. We're moving sideways. Okay. They're suffering because of recessionary fears. We know the Aussie is a commodity currency, but we know the pound has its struggles. So it's moving sideways, right? You're looking at 2 currencies that are not the strongest. One of them has to eventually win out. We're in the sell zone. We've done a lot, right, in regards to momentum, but look, nobody can win out. So what I would say, if I start breaking back below this 173.34, I was short, right? Here we are right here on the 4. Because price retraced in a downward trend, you have an up fib here, okay? So we're in the 80-20 zone. Okay? So here's that 173.34. This is an older level we don't need there. Okay, but I will put this in here because this probably is going to close out as a 4-hour level here shortly, like that. Okay, right in that zone. Okay. So we'll see. He's trying to make his mind up. If we start breaking below, so I had 173.34. That's a daily level, but you got a 4-hour that's coming in right here too. All right, break below that, we're probably going to continue. Nice bearish candle as a result of what happened today. Okay, Governor Bailey, but is retesting that candle. So let's see what happens. Break and close below that 174.63. Probably look to continue short. All right, see what happens. See what happens with that. Any questions on the pound Aussie?
No, sir.
All right, pound CAD. Broke right below that 152.53. Anybody short?
No.
No.
You didn't get back to.
Okay. Well, we might see that. Now, I'm looking at it based on this bearish candle that slammed through because the buyers tried to come back in and pushed it back above that level, that monthly level, and they pushed. Look at that. That got met with a lot of force to the downside. Okay. Now, 220 pip candle, crazy. Now you're looking at some tweezer bottoms, which makes sense after that. That's crazy right there. All right, it's in the same move to the downside. So, all right, which leads me to staying bearish. So this level, if we stay below that level, then it's time. But you look at these swings, you know, on how if it stays within that AP boundary and it falls along with your bias, now you can really trade small and clean up and you know, accumulate some real action. Some real good price action there. Okay, nice high correction, turn over out of the sell zone. So that's the pound cash. So continue to watch that. Now, like we say, if it's meant to go bearish and it's going to continue and it moves into our push zone, that means we've got on this 4-hour fib, that means we've got over 1,300 pips, right, of selling opportunity. So no worries, right? Just let it move down, let it do its thing. We just came into an extension. Just let those down AB fibs form, and then look for high prices to get short. Okay, so we hit a D extension. Maybe we get a fib to set up on your one like this. Okay, then maybe we come back and retest this level like so. Okay, just let the market do its thing. All right, but right now my directional bias is right. Okay, it's moving bearish. So let's see if it wants to continue in that direction. Any questions on the pound CAD?
No.
All right, awesome. Pound Swiss. We highlighted this level. It's having a hard time with it. Stochastics in the buy zone though. These pounds are interesting plays. And we have folks in the group that are staying away from them. I can't blame you. I can't. It's fundamentally what's going on is just, it's crazy right now. But right, we're bearish. It's corrected back up to this level off that 101. Okay, coming off those lows. Right now, this is how I'm playing it. Why? Because this A got taken out. This was the original setup here. Okay, bang. It corrected off the B boundary. Oftentimes, right, we say it a lot. When your A boundary gets taken out and you run the fibs the other way, oftentimes that correction is fairly sizable. Okay, and that's what we're getting. So that correction off the level, right, over 300 pips. Big moves being spotted. Okay, so it stand below this zone. Okay, so as long as it stand below that zone, looking to stay short right now. Right, so the market tells us otherwise. That's why I had eliminated this for now, because I know in my head where that's at, that buy zone. But I just wanted to give it a clean look, right, to the downside right now. All right. So eventually, we'll get a new fib here. I think so. Somewhere, wherever it forms that low. And potentially maybe move up. Retest, maybe not. We shall see. But that's the pound Swiss is moving to the downside right now. All right. And we had set up over the weekend when we were discussing it, Ryan. Hey, and even last week, because of everything that's going on with the pound, we'll play it as corrections and we'll just follow the levels down. And if eventually our A gets taken out, then we're already moving in that direction anyway. All right. Okay. So you could do something like this if you want to identify it. Okay. Keep your charts a little clean. All right. Instead of having fibs running in both directions. Hey, the move right now has been down. I know that this third level, my TP3 potentially on this fib is my A boundary. So I already know that, hey, if it hits that TP3, I'm looking at a bearish continuation anyway. Okay. Like that. So I'm moving to the downside. That's the pound Swissy. It's pound yen. Okay. Right, turn over. Look at that in the zone. Okay. There's that range. Right. Let me click back out to the daily. All right. AB boundary. Stayed within the AB boundary. Didn't take out the A. Okay. So now it's just a matter of what it's going to do. It's ranging. It's ranging, right? So strong push up. Here's the correction. So it's just a matter of what, hey, all I know is on that impulse move up, it gave us an 80-20, which is good for a counter trend. So out of that zone, right, 575 pips, just like that. Okay. Didn't even get to this 382. All right. So that is where we are. There's the move on the 1 hour. Mark your charts up, ladies and gentlemen. Let it hit your levels. See if we can get it further pushed down. Ryan, you still holding the pound yen?
Yes, sir.
My man. I think it was that Monk book, man.
It was a lot of.
That gave you your patience on the breakthrough, man.
A long time.
Congratulations, Jeremy Ebony. Congratulations. Think like a monk. You just about got to be a monk. Maybe I need to go buy the monk gear and actually put it on to sit in these trades for as long as you're sitting in them. Awesome work, man. Awesome work. Good job, everybody. For sure. It gives me excited when I see people taking the trades, taking the setups. Ebony. Won't just be killing me. Pound New Zealand. I don't know. It's all over the place. Right? So we see it broke back above the key levels, trying to find the support. But right, crown to low. We got a crown type action, but I don't know. I need this zone right here is what's the kicker. And we know what's going on with the New Zealand currency. Here I got it better drawn up on the 1. All right. But it's a matter of these levels, the zone again, it's It's got me wondering if it's going to do it, but technically that's an 80-20 with a crown reversal pattern. So it's just a matter of whether it wants to hold or continue to break down through these levels. So that's the markup that I have on it. Ryan, what do you have?
I have the exact same thing, and I'm short on. I've been short on it for a minute.
Okay.
199, 323, just above that, right? It was before that right tip formed, but
That right tip.
entry is just above it.
Yeah. I want it. Good job, man.
Good
job.
Yeah, I have the same thing, pushing down. I brought the 4-hour fib. Did I do that? I think I brought the 4-hour fib down to the 1.
On the up fib or down
one? Yeah, that one going up.
Fib, the up fib, yeah.
Yeah.
Kind of. Okay, I see what you did. Yep. Nice. Yeah, it'll take a lot to get paid on them pounds, man.
No. They go.
Yeah, for sure. Yeah. So Jeremy, right? Crown reversal pattern on the chart. So what we look for is price. Okay. The price is gonna move. We'll do it in the uptrend. Okay. All right. All right. So you're making your ABCD waves moving up. Okay. And oftentimes, when price wants to reverse, okay, it gets to those levels, maybe from our top down, we see us at a monthly resistance level, something like that. Okay, like this. And in our lower time frames, on your entry chart, so you may say, man, we've reached this level. I'm looking at the daily, and you could say, man, that's a monthly resistance level, and it's a daily, for example, 118, 127 zone. 80-20 on that daily fib. So I'm looking for a reversal. So oftentimes what will happen is this is where your patterns that you hear about all the time, like on YouTube, head and shoulders, this and that. People hear about it all the time, but they're like, well, where do they occur? Where are they most likely to occur? Like sometimes people don't explain that. And it's just like, so now you're just scurrying all over your charts looking for head and shoulders, crown patterns or stuff like that. And the bottom line I know is that they're reversal patterns, right? And if we understand the Fibonacci sequence, we know now where price may reverse. So what you get is you get price making ABCD waves like so. Okay. And we've got our uptrend line going. Okay. This. And we get here's my label. We get like an A, okay? We get our B, C, D. Okay. Like that. And we know that our C becomes our new A. We've all got that now, right? Boom, boom, C, okay, D. But hey, a lot of times what will happen is while you're tracking these on your lower time frames, when it hits those key higher time frame levels, which is why we do top-down analysis, let's put that over there. At some point, the game ends and price reverses. So we're making A, B, C, D, A, B, C. Well, that's supposed to be our D, but we run into a level. Okay. So what happens is, okay, one, price breaks the trend line. Okay. So, bang. Okay. Broke the trend line. Two, we like to say price takes out the A. Okay. Like so. Why do we say that? Because look, A, B, C, D, A, B, C. If the trend will continue, it will hit a D. And if the D extension is hit, then my C becomes my new what? Somebody tell me.
A.
Absolutely, right? So we say 2, price takes out the A because that D extension didn't happen. But what happens? It takes out the A. So what we're saying really to you is, hey, price takes out the key level of what? Support, in a sense, right? Boom, took it out, okay? Now this is where people typically who don't stick to the rules on the head and shoulders get thrown all over the place. All right. And then they say patterns don't work out. Well, it's because you made the pattern whatever you wanted to make it, and you didn't stick to the measurements for what makes a pattern, right? So some people will be like, oh, this is just an off-centered head and shoulders. This is off-centered. This is just I don't know, all types of stuff, but it's still a head and shoulders. No, it's not. Okay. Because if it was going to be a head and shoulders pattern, the support would hold and you would have an even neckline, but it doesn't. And then they get mad because they'll say this is a head and shoulders after it's broken at level of support, and they'll look to enter, right? Because they'll say, well, I'm gonna retest, right? The retest of the neckline. And then what happens to them? This is what happens to them, okay? And they play it tight where they'll put that stop right above that level here. And they'll get stopped out, right? So because they'll say something like this, oh, right? Didn't happen, okay? It pushed up, but the support got taken out. Price takes out the A. So then we move into 3. Identify the left tip of the crown. Okay. Left tip. Okay. That's your left tip right here. For C, right? In other words, step 4 is to foresee, get it? Foresee, see the right tip. And why is that C like that instead of SEE? Because the right tip is going to be your C, A, B, C, D. So foresee the right tip of the crown. Okay. Like so. And then once you identify that, you look for the downward continuation. Because what did it do? It created a lower low, lower than this low, then a lower high, lower than this high. Bang. It's the beginnings, right, for a potential reversal. That's your crown. And number 5, draw your trend line. There. That's it. That's your crown. That's a bearish crown because we're going down. Got it. Not me, man. All praise goes to my mentor. All right. All praise goes to my mentor. I'm just passing it on to you guys.
Thank you,
You're
man.
welcome. You're welcome. You're welcome. Passing on to you guys for thousands of dollars less. Just give it back to the trade community.
You're
So
not kidding. It's a lot less.
yeah.
I'm so grateful. I don't know what to do. I could just send you guys kisses, kisses, kisses. It's a lot less.
It is. Not even including all the upsells. So
all the add-ons and get this and got that. You got to have this for this scanner. I'm like, oh my God, I'm not going to be able to pay my mortgage.
Right. And that was one of the things that led us to starting a community and you know, at the price point things that we did, because I remember like, man, I just learned all this stuff, but I don't have any money put in my trading account because I paid it all to them. but it was but the what I learned was priceless though, you know, it's so valuable. But I just want people to be able to do it at a faster rate and not get caught stuck in that position of having to make those type of decisions. So yeah. I mean, they're genius, and it's an amazing mentor. So, but yeah, that's your crown there, man. That's it. So that's how you can kind of spot those reversals. So if we back things up, right, your your head and shoulders, right? It's those subtle differences, man, that help you to become more consistent, right? Because your head and shoulders will stick at this neckline, okay? Right? You don't want to call it a head and shoulders and you got a neckline that looks like this, right? Because that's not how the pattern was designed, right? To look, right? Your neckline should look like that, right? You want that neckline should look like this on the head and shoulders, because you either want to trade it aggressively, okay, off the right shoulder of a head and shoulders, or you wanted to break it and then hold like that. And then you trade it, which is nothing but what? An ABCD wave followed by another ABCD wave, right? So that in essence, right, if I'm using like Elliott wave, that A to B boundary is my 1, B to C is my 2, here's my 3, my C to D, and then you usually get that fourth wave followed by a 5th wave, and then you get an ABCD correction, right? So D, right? 1, 2, 3, 4, 5, and then you usually get what? An ABCD correction, like so. Like this, okay? Yeah. Cool. Which is another reason why counter trend trades can work because of that, right? So 1, 2, 3, 4, 5th wave, ABCD correction, right? Which is why we know that the whole idea of trading corrections can work. That's that, right? So that's how that goes. So that's why we call it it's a subtle difference, but it's a difference nonetheless. Okay. Nonetheless. All right. It's a difference in how you're gonna treat that. So that's how we spot those. Right. And that's just the thing. Hey, the more you spend time on the charts, the more you will see it. Right. Okay. So you can see that on this reversal. For one, we know the potential of a reversal because it's a new B boundary, which is a new old CD. So I got this AB, right? And you see that correction, we didn't break out off that level. It just didn't break out. So we say, okay, wow, well, it didn't break out and push, right? It didn't push. So we came back and see how it took out that low, and then it turned over. So it's just a matter of whether or not it wants to finish the pattern. So that's it right there. There's your major low right there. And then you see how it pulled back. It didn't break this level. And that's the whole key, right? Because people say, wait for a break and a retest. Well, when it broke this level, it did not only retested it broke back above it, right? But that doesn't mean that that's not going to come back down, right? You just have to recognize the pattern. And do they fail? Yeah, absolutely, they fail. They do. They do. But yeah, so it's not, nothing's 100% in the market. All right. But that's it. And before you know it, you'll have the spatial intelligence, you'll be seeing it all over the place, right? Like everybody here. Okay. Monster. This was the monster. See how I took that low out? We pulled back. Then it just collapsed. Okay. That was a huge, huge crown reversal pattern. See that? There you go. You're welcome. Glad you had an aha moment. Right. But that's it. So that's how we knew on the Euro Swiss, right? Before even the war broke out. Yo, that's a ridiculous crown on the weekly chart. So we knew the euro had been falling bearish, and we know we got the pull back. But it's like, well, what's going to be the catalyst to continue to push this to the projection, right? Because when you do patterns and pattern completions, then you can draw your fib like that. Bang. And you see how it came right down to that target, right in line. Okay. So it's like enter it, right? And then it fell, right? So if you like hold long-term positions, it fell 1,700 pips to the downside. Right? It took forever in a day, but it did. Okay. It did. But that's it. Just always keep in mind, everybody, that through all of the stuff, through all of the lingo, all the different time frames and charts, the market moves up, down, and sideways. But it moves up, down, and sideways. It does it in waves. Ryan at Euro GBP, man. I didn't know how long it was going to take, but it broke out.
Finally broke out, man.
My man.
Finally broke out.
We said it. We're sitting at this level, everybody. All right. We're sitting at this level. Give me 1 second. See it? It's moving. All right. That was the setup. Okay. And it's moving long. Out of that zone. Okay. Yes, I know our trades take forever in a day. So we tell people to trade small and scale into it. All right. Awesome, Jerry. Right. Scaling into your positions, because you will be sitting in a position for a long time And you don't want to tie your account up so bad to where you can't go get into other opportunities that may be moving along a lot faster, okay? There's a lot of reasons why risk management is important. But that's the mover right now. So think about this from the daily, okay? If this continues to be the case, and if this is definitely the C low, okay, we got a stochastic in the buy zone, momentum is moving in the direction that we need it to right now. If our projection is a 1.618 or back to that high, okay? So coming out of that zone, that means I got over 1,000 pips of buying potential, potentially. So I can put a trade in and let it go, or I can just say, hey, I'm going to trade ABCDs to the upside for 1,000 pips, right? So maybe you don't want to stay in it long term. Maybe this is my first target, right? I got to end off the break and the pullback. That's 147 pips. I'm good. I'm out. But the next time I get a new fib and it pulls back again, I'm going to get long again. You know what? Okay. That's 200 pips. I'm out. But you know, overall, I'm supposed to be long, right, on this if the projection holds for over 1,000 pips. So that's why we always say you have so many pips of buying potential. Okay. That's how you can go about that. Or you can use these same setups to add to your position and just keep accumulating positions along the way. All right, but right now that's projection, and fundamentally I tend to favor it up. Right. So, and as is what I'm saying to you is, if you missed this initial and this is not your thing, then hey, look to potentially get in, right? Once the D extension is hit and you get a pullback, maybe this is when you get in. Okay. But right now we're looking long on that. So we'll continue to watch these closely as we know everything that's going on in the UK, and we've got war in the Eurozone. So, but right now that looks pretty good. Looks pretty good to the upside. All right. Any questions before we log off of tonight's session? Great job, everybody. Keep putting in that work.
No, thank you.
You're welcome. You're welcome. Ryan, anything to add before we close out, sir?
No, sir. Great session.
Thank you. Thank
Actually, no, I take it back. Gordon K. I sent the message regarding the Telegram. Email was sent to you the day you signed up. So check your spam, your promotions folder. The email was sent to you. So other than that, great session, bro.
Thank you very much. All right. Hey, look forward to seeing everybody tomorrow at 6:30 a.m. Eastern Standard Time with my awesome partner, Mr. Ryan Carthage. Have a great night, everybody.
Good night. Great session. Thank you.
Good night. Thank you. Appreciate the feedback.